Hi guys, welcome to. That took me off guard.
I just wanted to get through the advert to get to the strategy.
I completely didn't expect that to shoot up on my screen. Okay, reset, back to the beginning. Welcome guys to today's live stream. You are joined by myself and Blayn. As per usual, we are here to build some strategies, do some good for the world, build out a charity Darwin, and see if we can make some money. All in the name of fun and charity to, potentially help you guys as well who are aspiring algorithmic traders or aspiring portfolio managers, putting together systematic strategies. So I can see there's a couple of comments. So in fact, the room's filling up very, very quickly, which is great to see. I think the response to these sessions has been really good. So I appreciate every single person who tunes in every single week, whether you watch this live with us, whether you comment on the stream or whether you watch it recordings. Like, we appreciate you guys more than you know. Rapalas, how we doing, my friend? Hope you're all good. Mr. 500, 5,000 guy. Hey guys, hope you're both well. I've got a feeling that might be Rob, but I'm not 100% sure. But how we doing? I am very well. Hope you are too. Guess who, by the way? Yeah, exactly. I guessed before you even said it's me. Okay, I am going to hand this over to Blayn. We have just under an hour where we're going to look at, in fact, I'm going to hand over to Blayn. Been an abysmal entrance to the stream because I got caught off guard with a YouTube advert. Over to you, dude.
To be fair, I thought I was well prepared, but it turns out I shut down the internet thing. Well, not the browser. So yeah, apologies. But yeah, welcome guys. You're joined again for another sort of strategy. Well, sort of strategy. It is a strategy development. So again, this is another source that I shared in that sheet all those weeks ago. It must be over a month now. Yeah, something like that. And this is where one of the YouTube channels that when I first started building the strategies that I took some inspiration from, because the strategies are very simple. But what we're going to do today is actually test one and see, does it still work? Because as much as I can give you these resources, it's interesting to see, even since these guys have made these videos or released the strategies, do they hold weight all these years later? So this one was made, December 2023. So yeah, we've got just over 2 years out of sample that we can test. So this will be quite interesting. And all it is again, it's a very simple strategy. Again, it's just going to be a Bollinger Band. By reading it, close above. So it's going to be more of a Bollinger Band breakout by the sounds of it. So it close above the upper band. And it's in a length of 100 with a standard deviation of 3 and -3. Target of 200 pips. Sorry, stop at 200 pips and target of 350 pips. Both has exit time and exits as well as a trading window of 9 to 11 a.m. Eastern. Now I'm just going to have to try and think what that is. Is that between 1 and 3? Do you know, Kieran? 1 and 3 Eastern. You good with your times?
No idea. No,
I'll just have to Google. Unless someone in the comments will let me know what 9 a.m. Eastern is. 9 a.m. Eastern? The UK. Just so then I can actually have a look. But I know it says it's got pips for stop losses and targets, but for me, I'm not a big fan of static sort of stop losses, so we'll probably try it with this originally to see, does it work out of sample? But then we'll go on and see if we can get it with an ATR stop loss and maybe see if we can change some things and improve the strategy. So again, I'm going to build this in FX Dreamer for you.
9 a.m. is 2 p.m. UK time. Just FYI, Blayn.
2 p.m. UK time. All right. Okay. Yeah. Interesting. So 9 a.m. 2 p.m. So that's 1600 to 1800 time window. All right. Okay. Cool. Okay. So obviously it was wanting us to build a Bollinger Band breakout. We're going to have to think about this just quickly, because obviously we're going to have a sort of time filter. So yeah, essentially we'll first do, if there's no position, because this is going to be a very, very, very straightforward one. We're going to do if the candle close of 1 is above the Bollinger Band of 100, deviation of 3, and just to be sure, upper band. Now, it was wanting us to test it on the 1 hour time. So we'll test this on the 1 hour time frame today. So we'll see what we get here. Now, one thing we're going to have to test here is it says a close above the upper band. Now, obviously, we've only got a 2-hour time window, so it'll be interesting. Are we only looking for a close above the upper band in that? So the previous day, the previous bar was below, this bar is above, or is it just purely doesn't matter? We're just going to buy it whenever it's above. So we'll test both, and we'll see what sort of results we get. We'll try to get as close to what Scott shows on this video. I believe it's something around here, and then we'll see if we can go from there. Till I see a shift behind you, Blayn. Love this. Yeah, nicer weather here in Scotland that I can actually get outside to the actual office. So yeah, it's nice to actually get some fresh air coming in and being able to be out here rather than in a dark inside room where there's no sunlight. So yeah, we'll test that first. What I want to do is actually I want to do a once per bar first, sorry, because we want it to be checking once per bar. So once per bar, no position. If the close of the 100 band period, sorry, of the standard deviation of 3 in the upper band, if it's between the time of, Kieran said 2, so it'll be, because the way that the server works, we're then like adding the GMT plus 2 onto it. So it'll be 1600 for 2, and then it will be 1800 for 4. So we'll do that, and then we'll add the buy now. So we'll just first of all like test the old. Now it's not very clear. Does he risk? I'm pretty sure he normally risks like 1 standard contract or something along those lines. Let's just check. Can't really see anything. But from what I understand, is normally it's only risking 1 sort. Yeah, lot size of 1. If we can see here. Okay. He also has a break-even trigger there as well. That's interesting. It's not in there. Okay. So we'll simply just do exactly what it says. Risk 1 contract. We are 200 pip target, and was it 350? That. Yeah. And then for long, we'll be doing a 450 bar stop out sort of thing. I've never done it like that long. So again, it'll probably just be in hours. Like, we can't really do bars on FX Dreamer, so it'll still probably work out maybe a difference of like a day or 2. So we'll do 450 bars here as the bailouts. It's a sort of bailout sort of trade management if it doesn't hit take profit or stop loss. And then that's that, as simple as that. Again, we'll do it for the short side. So you can just copy and paste. We'll do candle ID below, close below, and this is very important that you select the lower band here, because that's what we're trading. We're trading the breakout close of the low of the Bollinger Band. Again, using the same time horizon, and we'll do sell. Again, same 1 lot, 200 pip stop loss, 350. Again, the bailout for that was 430. Strange one, but we'll do it anyway. And that's as simple as that. So this is what we're going to originally test. Now, again, what I did mention is what I probably would want to see is a close below for candle ID 2, then a close above. So we're taking the first initial close above the Bollinger Band. But that might be me just presuming things, but we'll test this anyway first, then we'll see where we go from this. So once per bar, if there's no position, to make sure that we've only ever traded 1 position at a time. If it's above the Bollinger Band, within the time horizon we buy, below the Bollinger Band, within the time horizon we sell. It's as simple as that. Let me just get this up. And that is a sear red on my other portfolio. It's not looking good. Yeah.
It's not looking good, Brev.
It's not looking good. But to be fair, it's already closed up in 300 odd profit, 200 odd now. It's what it is. All good tests at the end of the day. So it was the Scott Welsh Bollinger Band, 1 hour. And it was on pound. Yeah, so First of all, let's see if we can get the sort of same results to the end, and then we can test the out of sample data. You're not always going to get the exact same like for like when you do some of these tests, but if we get something similar, then it knows that we've built it in the right way that Scott intended to build it. So we can just wait and see what we get. Hopefully this doesn't take too long. Because it shouldn't, because it should be a very straightforward system. Okay. So just doing pound yen. Hopefully this will speed it up. Then what I'm going to do in the background is I'm going to flip the condition so it's doing what I thought would be good. So the candle I did 2, 2. Basically what this is doing is it's making sure that we're only taking the first initial pulse above the Bollinger Band. But we'll check to see if that is okay. It might not be, because then it might be filtering out well too many trades. But obviously we can check. So let me just get to what it was looking like. Now I don't know what time horizon he is tested from. Does it say anywhere? 2013. We're going to look at a test from like 2018. So that's the joint combination of the portfolio. So as long as we get something that looks fairly decent, then we can take it from there. But so far it's looking not too bad. Maybe my way of would be maybe a little bit too niche. But we can test that also as well. So far it's looking not too bad. Now the only thing that I will say is it's trading pound yen, which I did trade quite actively up until probably recently, just because it was obviously a very volatile pair, but I feel like over the past 2 years the volatility sort of like dried up a little bit for my sort of strategies. But hey ho, if the volatility picks back up with pound yen, I will look at trading it again, because it can have some very aggressive moves in the market. So test is almost done. So far, so good. 2023. Okay. So trading one lot per trade, we've had 18% return, 18.5% return, 5.9% drawdown, 1.55 profit factor, but we've only had 62 trades. So because it is only trading in that 2-hour time window, that's why it's not taking too many trades. But it seems like it does capture a lot of decent moves. It's good to see that, long trades are winning a lot more than shorts. So that'd be quite interesting if we were to add sort of like a moving average filter, because most of the time pound yen has been going up, and we can still see even in today's time it's moved up since then. So let's just do an out of sample data test to see how is this strategy performing right now. So we'll do to today. We'll see where we get with this. Okay. So far, it's kind of failed out a sample dramatically. Yeah. Okay. So out of sample, we've had 20 more trades, and we've actually lost 9% with 11.5% drawdown. So what we can say about this strategy is out of sample, it is not been good. Now, just because it's not worked with, following the sort of rules that Scott has made, it doesn't mean that we can't try something ourselves. So I'm not going to bother testing this purely because it's going to give so many low trades. But what we can do is, let me just get rid of that. Let's see if it's possible. To be honest, for me, I think that time horizon is very, very small and a bit too niche when you're trading on the 1 hour time frame on a Bollinger Band breakout. So let's try and get rid of the time filters first and foremost. And let's see if just a simple Bollinger Band breakout works on the pound. Sorry, I got rid of those blocks. I was meant to get rid of the time frames first. I wasn't meant to get rid of those other ones. So let's do same condition, but below 2 and 2. So that means we're just purely taking the breakout. Copied the wrong one across. Two and 2. Okay. Just check 2 and 2, 2 and 2. Okay, cool. The next thing I'm going to do is, I'm not the biggest fan of risking like one, because I'm going to be using ATR stop loss. I really don't like using, say, one contract, one lot, 0.1 lots, or anything like that for my testing, because we're using volatility. So stop losses can be changing from small to large, and can change anything in between that. So we don't want to risk one contract if the stop loss can be bigger when volatility is smaller, when no volatility is there. There's nothing wrong with doing it that way. It's just, this is the best way that I've found for myself with some of my breakout strategies that have worked best. And it's just something that I like to do because I like to have that sort of knowing how much is at risk per trade. So we'll do average true range. Go over the 20. Again, what we'll do is we'll just stick to the 1 hour for now. But what we're going to do is we're going to add some conditions. Now, conditions, for anyone that doesn't know, these are just simply like inputs that you would have. So what I'm going to be doing is TP. So TP is for take profit. We'll put something like 300, something simple. And for this, I'm going to do M. Now, M just means, for me, it's just going to be multiplier, because what I'm going to show you is how I test different levels of ATR. So we've got our average true range, stop loss, the 1 hour. We're looking at the last candle of the ATR value 20. Then the adjustments, I'll simply just put times M. Now, times M, you'll see, allows me, when I'm in the MetaTrader platform, that I can then do an optimization based on different multipliers of the ATR stop loss. And then simply here, we're going to do TP. Okay, so do you know what? We'll just keep this bailout exit just for now, because I don't think we'll ever really need it. But we'll just see how things are. Again, changing the same for the other side. arbitrary range, we'll do 20. Do the 1 hour again. Sorry, times M, and then we'll do TP there. Okay. So again, we're doing the same on the other side, and we'll just go from there. What we'll do is we'll run a multiplier test, and we'll take it from there. Because then what we can do is, based on data, we might find a perfect time range to trade the Bollinger Band breakout. It might be the Asian range, it might be European, it might be New York. We'll find this out when we do the testing here. So what we're going to do is we're going to first and foremost, we'll just run it from 2020 to 2023. And then we'll just run optimization again. Remember when I mentioned that the TP and the M for multipliers are in here? We're simply just going to do 1 to 2 for now. But what we're going to do is test different multiples of ATR. So we're going to do the 1 times the 1 hour. We'll do it in steps of 1. And we'll go up to, let's go up to 6, so potentially 6 times the ATR value. So we're going to get 6 different results here. This could take a few minutes to get through. But what we're doing is we're just simply going to be testing different sort of stop losses against the same ones too. Because the reason we're doing this, we're going to do basically we're going to do, this is our in sample period where we're going to try optimize the stop loss or try and find something that's robust. So I'll probably see if it's working so we're going to see 1, 2, 3, 4, 5, and 6 multiplier. What I would like to see is it working across a good range. So if it works on the 2, I'd like to see it work on the 3 potentially and the 1. So then I'm picking the sort of middle ground because I know it'll work either side of the ATRs. So we'll see if we get that today. And again, we can then take it further and we can look at potentially putting it into Quant Analyzer today. We can see if there is an optimal time horizon, like what Scott did with the 2 hours, to trade this sort of strategy. We might get some success, we might not. I'm going to presume that the long side is going to be working well and the short side not so well because it's been, everything's kind of been trending on a longer term for the past 15, 20 years to the upside against the yen. So maybe that's something that we'll just add in a sort of moving average. It could just be a simple 200 moving average and we can see where we go from there. But again, we're not going to do that unless we start seeing some positive results. So we'll just wait. And maybe the 1 hour is not the best to choose here. Maybe the 1 hour is not the best sort of time frame to choose. But we can test other ones anyway. And again, we might the 100 period and the standard deviation of 3 might not be the best value. We don't know. We'll just have to see. Okay. So we've got another 2 tests to go. But so far, it's looking pretty good. We can definitely see that between the 1 and the 2 looks like it could be a decent sort of stable range. Even 3 is pushing, so it's not too bad. So because it works on the 1 times 1, it works on the 1 times 2, and it works on the 1 times 3, I'd probably just pick somewhere in the middle and go with the 1 hour times 2 multiplier. So we're going to go with that. How is the charity portfolio doing as a ticker creates? I think the ticker will be created next Monday, Kieran, is it? Is it next Monday?
I presume so. I haven't logged into it in a while. I presume it'll be live next Monday. We had an issue with a couple of the S&P strategies that we built on, or that I built on Strategy Quant. So we took a little bit of a hit this week on those. I've closed those strategies and we're just gonna let it recover. I mean, I say we took a hit, it's down a couple of $100 or a few $100. But it should be live next Monday, I believe.
Yeah, and then we'll just have it in the announcements so people can keep track of it anyway. So it'll be all good. Okay. So we'll take it from here anyway. We'll just go with the 2 multiplier. It's good to see this. This is good. We're seeing the Bollinger Band breakout on pound yen does have an edge between this time horizon across multiple different stop loss ranges. So that's also good. Naturally, the bigger the stop loss, that might actually be the bailout sort of strategy coming into play when we're doing a 6 times 1 hour. It might not. I don't know. We'd have to look at the screens. But what we're seeing is the bigger the stop loss, obviously the longer horizon we're trying to like push the trade, which means that the target's a lot bigger, meaning that we're paying more commissions and swaps. So makes sense as to why we'd normally keep it a little bit smaller. So we're going to go with this. And what I'm going to do is we're going to test it as a whole collective from 2018 to 2026. Or it's not that date yet, is it? It is. Well, 3rd of March. And we'll see how it performs for this. Now, we're going to have some, with it being like this is such a raw sort of entry, like this is just a pure, this is not like a fully complete system. This is a pure just entry model. Like a Bollinger breakout is just a pure entry model. So this is going to show me whether there's an edge in the entry. And then from there, this is when it gets a lot more interesting. You have to be a bit more creative. Like testing multiple things is where I would go. But what I always go back to is the entry profitable? Because that's the most important thing. Is the entry profitable? If it is, then we can start building on it. So what we did see from that small horizon is we seen that the entry was profitable. So even on a 1 to 2, so from there we can then add to it and build on it and see if we can get it to the next level. So the next level is something that is, got a decent profit factor, a good return to drawdown, a good stagnation period overall. But if it shows like it's really good overall, it might, let's say hypothetically the past year and a half have not been too great. It doesn't mean that the system's dead. It could just be a new little drawdown. You could start testing this here and think, it's in a drawdown, it's not worth trading. But then again, we then see it explode to the upside, probably after this point. So don't be put off if latest past 6 months to a year's results are bad. As long as like you see that sort of going through those market regimes, that's how it happens. That's not too bad. But then again, we can then add different filters to maybe avoid times that are like this. Again, this is all about your creativity as a trader as well, and understanding how certain markets move. So simple things like hypothetically, let's say movement is very low around this area, then you could obviously add like an ADX sort of thing. So don't get involved when like volatility is low, or you can do the opposite. Some systems actually really do perform in the opposite. So when volatility is like really low, it then is anticipating a breakout. So either or can work. It really does depend on the type of market that you're trading as well. So yeah, that's something for everyone here today to maybe go and test, see what markets are actually work when volatility is low, what markets work when volatility is high. So it's quite an interesting exercise to do, and it really makes you understand sort of different markets as well. But yeah, we'll just wait and we'll see what we get here. I'm not too confident because I've traded some pound yen in the past over the past 2 years. I'm not the most confident in 2024. Maybe I'm going to be proven wrong here today, which would be good. But again, we'll take this into Quant Analyzer, see if we can find a good time horizon if there is one, because we've never really done that with a strategy yet. So it'd be cool to do that today. Let me just get Quant Analyzer ready anyway. We'll see if we can go from there. But yeah. Okay. So again, nothing is looking great here. The entry is profitable, slightly. But again, it is kind of lacking. Like for me, this is not what I would see even from an entry standpoint, it's tradable. But for the sake of the exercise that I'm going to do here, we're just going to take it from here. GJ. So let me get this loaded up. Maybe while we do that in the background, we test on a different pair. But again, maybe the settings are really bad, like a 3 standard deviation of 100. That's quite wide. So maybe not the best. But again, these are all things that you guys can go and test and optimize. The purpose of this is just to kind of show you how to build it, sort of what sort of things I'm looking at potentially implementing, and then taking it from there. So let me just go do a test on, let's do a 4 hour, just while I'm analyzing this in the background. See how things are going from there. Right. Cool. Okay. So we've got our back test report. We can see that from 2018 to 2023, everything's looking great. Everything's looking decent. But we can see 2024, 2025, pretty poor. But again, we can see in February this year, we're starting to see a little bit more of a recovery. So the question is there any way that we can avoid times like 2020, 2024, 2025? Again, these are things that we can all go back and look at in the charts. As some of you guys might be manual traders and might have an idea as to what sort of conditions you would be want to trade in and what sort of conditions you wouldn't want to trade in. But for the sake of this, I'm going to say that the shorts are going to be negative. Yep. And that's based on the fact that we've been more pushing to the long side on pound yen for the past, I don't know how many years. We go through a couple of drawdowns and that, but again, short side tends to be pretty bad. We'll check the long side. The long side looking not too bad overall. So we can see the long side. Yes, it's not made new equity highs, but again, it's in that right direction. Where if we look at the short side, we can see that it's more, that has really struggled in the past sort of 40, 50 trades. So it would be quite interesting to see sort of, okay, so looking at hours, we can see that there's nothing here. So what we would say is probably we wouldn't trade this in the Asian session overall, and it comes to live in the sort of like London session, which makes sense because it's pound. But again, that's the only thing I can conclude. But again, I'm making that assumption just looking at that. There's not enough data there actually for me to say we're not trading Asia, so ignore that actually. Single days of the week, again, can be quite sensitive unless it makes logical sense. So always try and make sure there's some logic behind the decisions that I'll make. But again, so far, it looks like Monday, Tuesday are really good, like really strong. But again, we're basing this on 123 trades. For me, that is not enough data to say Monday, Tuesday strong. Interesting, again, short side, Wednesday, Thursday, great, but sorry, Wednesday's good, Thursday's not that bad, not that great, but the rest are terrible. So some people might just go like this and be like, right, I'm only trading Monday, Tuesday, and then turn it on, and then we start seeing a rebalancing on the singular days of the week into what's profitable and what's not. Just because they're so strong here, again, that's what, 13 trades and that's 16 trades. So that's based off of 40 trades. That just is not enough data for us to make that assumption. So yeah, but what I would do is we could potentially just trade long only with a trend filter. So we can see that short just really isn't doing anything, but long could. So let me do a what if on the long side quickly. Trade direction long only. And we can analyze it here. Okay. So what's quite interesting is long only has been profitable every single year so far. So that's quite interesting. We might actually sort of like drop the length of the Bollinger Band as well as standard deviation and see how it gets on with that. But we can see that there's an edge long only over the long term on pound yen. So what I'm going to do is we're going to apply a moving average, see if that improves things. and it's only to add that sort of regime filter, so we're going along with the overall trend as well. That's purely going to be the reason for it, because hypothetically, let's say interest rates change in Japan and things like these start happening, we might see a shift in change into where pound yen goes next. We might start to see not as much bullish momentum for pound and dollar against the yen. We might start seeing some sort of like stagnation, or it might even start going into a downtrend. We don't know, but what we don't want to do is make sure that we're getting caught up buying when we're in a clear downtrend, essentially. So we're going to add that sort of moving average, but we're also going to try and test different sort of lengths to the the period and standard deviation. So I'm quite happy with the two times ATR of the 1 hour. I'm quite happy with the 200. What we're going to do is we're going to test the period. So right now it's 100, and standard deviation is at 3 right now. So we're going to test that. I'm going to quickly turn that off. Sorry, off, not detach. Again, maybe what we do is candle close of 1 over, let's say, 200 moving average, just as like a nice regime filter, because that's quite a standard thing to do. Okay, so now I need to put in the periods here and the standard deviation here, again, just so we can do that sort of optimization. Okay. So we don't actually need to do the test on the 4 hour because we've got another thing to do here. So let me just get up the data folder. Okay. Just do 2022. And we'll do the period and standard deviation. We got this correct. We're going to do it in multiples of 20 up to probably, let's do up to 200 just so that it's going past that period. And we're just going to do basic standard deviation periods of up to 4. I doubt anything 4 is going to work. 1's going to take lots of trades. But what I want to see is just where is it robust over like sort of a massive area, or is it very specific to a certain period or a certain standard deviation? Because then we can be just potentially cherry picking something. So what I'm looking to see here is the entry to kind of work over a magnitude of like a big range of different sort of periods and standard deviation, because if we start seeing it work over like a massive range, then we can say that the entry itself is potentially robust, which means that we've got a good chance no matter where we sort of apply it in the long run, we might make a return. Obviously there's no guarantees. We all base this on past performances, but again, what you do is you trade things until they don't work. Essentially, that's the sort of methodology of why we constantly keep building more strategies, because we don't know when that edge will erode. If it doesn't, great. If it does, then we need to make sure that we're ready and we can deploy something new after that. So we'll just wait. This shouldn't take too long because it's going to be over. It's only over like 2 years. And we'll see where we go from here. Obviously, the lower the period and the deviation, we're going to see probably a lot more trades, I would guess. Maybe not. Maybe the higher the period, the lower standard deviation, we'll see more trades. Yeah, probably. So again, I'm not too bothered what the result is. All I'm going to do is analyze the data and take it from there. It sounds quite bad, but when it gets to this stage, like you don't really care what sort of result you get. If you get a positive one, great. If you get a negative one, that's also great, because at least that you've invalidated something that you thought might work. So as long as you journal it, it means that you don't need to come back to this potentially again as an entry, and you move on to the next entry. So what I done in the early days was test loads of different entries first, made like a bundle, like a good journal sheet of all the entries that worked for me, and then I built them out from there. Because it's easier having profitable edges and entries and building them out than it is to try and have an unprofitable edge and make it profitable. Because again, if you try and do that, which you can, but that's just curve fitting and it's probably going to fall off a cliff afterwards. So yeah. Okay, let's see what we're getting. Still got quite a lot of tests, but we will see negative results in here. To get all your results positive is quite rare, but what we want to see is a nice safe area. So we'll just wait a little bit longer. And there's lots of things that we can try here as well. This was based on, I was wanting to take the first breakout, but you don't have to if you don't want to. These are things that you can all test as well. Everything's all about testing the data and making a conclusion for yourself. My results might be different from yours. Everybody's results could be slightly different for what they're testing. So don't worry about it. It's starting to slow up a bit, so we'll just have to wait a couple of minutes. But so far, it's looking not too bad that we've got lots of different periods and standard deviations working, but nothing so far. What was the last? That wasn't the last result. Let me check. What was the long only result? So the long only result was 32.25% or 10% drawdown. So if we don't get anything better than that, it means that essentially these settings were cherry picked. That's what I would presume. So we're picking the best settings to show the best results, which, in my opinion, don't always get you the best returns in the future. What you want to do is we want to find an area like, for instance, like all the settings looked at 27-ish, 25-ish. We know that area, if we're, it's not too sensitive to one sort of certain inputs or period or standard deviation. It means that it works across like a wide range, which is always good. How many more have we got? Only just over halfway, so still got a lot more to come in. Check how many trades that actually takes. So 123. So we're not actually getting that much more, even with a standard deviation of 1. Like you think before, we had a period of 100 and a standard deviation of 3. So even when we're lowering the standard deviation to 1, it's not changing too much. But then again, we have added moving average. Maybe I should have not done it with the moving average and took it from there, but yeah, I always kind of like having something in that kind of confirms the sort of regime that we're in. So that's just something that I like to do, just so that we're not getting caught on the other side of the market and trying to buy when it's a clear downtrend. But there's other ways of going about it. That was just a simple one that I thought first and foremost. There's a lot more better ones that might work better than just a moving average. I just use something simple to begin with to build out from, and then take it from there. I'm interested to see the 103, 102. That's 103 was here. Okay, that's interesting. So the moving average has actually massively reduced the amount of trades. And that probably does make sense just because it's a 200 moving average in the 1 hour. So we could move that up to a higher time frame to go with the higher time frame sort of alignment rather than just the 1 hour. Again, it's something that we can try out and test because that's reduced the amount of trades by a lot. On Shane, how we doing?
Brush up on your Spanish, Blayn.
Oh, hola.
Hola, mi amigo.
Vamos.
I also forgot to eat, so I had to run and get a banana then.
What's that?
I forgot to eat. I've got no energy. So I had to run and get a banana. I disappeared for 2 seconds.
You're going to go do jiu-jitsu, man.
Yeah, I'll pass out if I'm not eating anything. Neither of us are C-level. I'm head of growth and business development for UK. So not C-suite level, although we can get somebody on who is C-suite level if that's something that you guys want to see. Ooh. Yeah. If you don't have Juan's email, drop us a message on Twitter, and I will put you in touch with him. I'll give you his email. But yeah, email is probably the best way to contact him. Alternatively, I could pass on a message, as I speak to Juan most days. Awesome, cool, good to know.
Okay, one more test. We're done for this one.
Okay, send me an email, because that's something that it would be me who would be setting that up, and I'll rope some of the guys in. Let me send you my email address, because Juan will likely just pass that on to me anyway. So send kind of a pitch deck to me, or kind of what you're looking to do. We can organize a call. We can hop on and have a chat. Yeah, see where we can go from there. But it sounds good. Sounds awesome.
Okay. So what I've done here is I've built up.
Maybe we can go to Ibiza.
What's that?
I said, who knows? Maybe we can go to Ibiza. I do have Telegram, but I don't ever use it. I don't even know if I've still got access to it.
Okay. So for me here, nothing is like, we can see that it's very profitable across like a multitude of different sort of like periods and standard deviation. We can see that in terms of like the period, we can see that the 100 is technically the best, followed by like the 80. So anything between like 80 and 100 is something that's maybe worthwhile looking at. But the problem is we do start seeing a big sort of tail off when we get to the 60 as well as we get to the 120. So that's really interesting. But again, it could just be potentially because I've added that moving average in here. So let me just check between 180. So you can see. So 1 times that is 27, times 2 is that, times 3 is that. So that's really weird. That's interesting actually, because the trades have massively reduced here. So that's quite cool. Again, do we see 1, see a pull, see a tail, a 3? Okay, let me just actually remove the moving average, so then we can actually make a good assumption. Because for me, there's nothing that's staring up in the face that's a massively robust area. Again, standard deviation wise, we're seeing anything between the 2 and the 3 is not too bad. Since we go to 4 is not too great. Right.
Rapalas, of course you can. Of course you can.
Do that. Let's do this again. Let's start off there. Let's just do between the areas that were actually not too bad. take it from there. But nothing is actually staring me in the face as to a good, robust area. And I think this is what's very important is all the results were positive there. But that does not mean that like there is like a great area of robustness in that sort of vicinity. What I want to see is like, okay, if we have a standard deviation of 2 and 3, how big I don't want to see a massive difference as such. Although that might make it a bit too, between 2 and 3 is quite a big jump in a Bollinger Band. So maybe that is maybe me being a bit too, how to describe it? I don't know. Maybe I'm just being a bit too sticky in terms of like not wanting to like look at something like that. But again, it's very important that you're very, I would say, picky with taking strategy to the next stage, because you'll find something that's really good. There's so much things that are simple, like entry wise, that you might think are not that great. You come across them, they're great, and then you can build them out from there. Kieran will back me up in this. Is like there's actually so many things that you can test that it would blow your mind as to what's actually profitable as an entry. So I'm not going to force something out of this, and some of the most simple things actually work the best. I think you've seen that as well, Kieran.
Yeah, I think the hardest thing that people have to get over when they start building strategies is, and quite a few people who I speak to keep saying this, is I don't know what to build. I don't know what to build. And I'm just like, just start trying to build any sort of anything. Like it could be variables that you've never looked at before. It could be indicators, just random things that you would never think of. Like if the last bar was higher than the past 10 bars, then buy something stupid. And I guarantee your thought process will spiral onto the next stupid idea and the next stupid idea. But these stupid ideas all have edge because everybody avoids them.
Yeah. Like for instance, like people would say Bollinger Bands don't work. I can confirm that they do work. It just needs to be traded in a certain way. Like that's the crazy thing. Like, you know, basically today we've validated the fact that Bollinger Band breakout on pound yen works to the long side. That some people would just completely avoid.
Bollinger Band active. I think I've got a Bollinger Band breakout active.
Yeah.
Oh, no, it's Euro yen. I've got it.
Euro yen. Okay, interesting.
And dollar yen.
Yeah. So that proves that, you know, there is edge in simple indicators that people thought don't work. It's just kind of taking them to that next stage and developing them. Quantum goes to Lost Bollinger Band. Nice one. Yeah, I think like the end game is if you can trade. This goes against like what the actual general retail say, like, you know, over trading. I think over trading can happen if you don't have a known statistical edge in like actual like revenge trading. But like if you can build loads of systems that are uncorrelated or, you know, and reduce the risk massively, that you're getting like more trades out. But at a low risk level, I don't see that as over trading. I see that as really trying to take advantage of multiple edges all at the same time. Mm-hmm. Again, the problem that you have at that point is you really need to stay focused on portfolio management and actually how much allocated risk per asset that you're actually giving the overall sort of portfolio towards that. So like you could build 100 strategies on pound yen, for example. You can think that you're trading at very low risk at 0.05, like percent per trade. But if all those trades overlap, then you're highly exposed on it. So yeah. How MT5 is for systematic trading? Well, Kendrick, we're using a FX Dreamer to build systematic trading systems and test them on MetaTrader 5. So this is basically what we're doing today. Algo trading is just systematic trading. FX Dreamer is free up to 10 blocks, so you can actually build some very simple systems just using FX Dreamer for free. Also, Perfectus AI is another software that is more modern version, probably better looking version of SX Dreamer. I think they do have do they have a free version? They do have a free version as well.
Yeah, I think you can export. You can only export the EX files, so you can't export the actual code.
Yeah,
and you get like 10 exports a month, I think.
Yeah. So you've got two options there that you can use. That then you can go test at MT5. Obviously, within MT5, you can then download the tick data from Darwinex. Now you can do that via the cloud if you want, or you can potentially just use Quant Data Management. Again, you can use a free version of Quant Data Management. It's just a little bit slower from downloading from the server. And again, from there, you can get XAQP data as well as Darwinex data as well. So there's lots of good free options out there to get started. And then once you progress, you can then potentially pay for some of these subscriptions and then take it further from there. But to begin with, just do everything for free. Do what you can for free. Test it out. Really start to understand the logic. One thing that I do recommend is, especially in FX Dreamer, is they do have quite an extensive forum. So definitely go through that because there's a lot of good things and lessons that you can find from there. There are some YouTube channels that do share FX Dreamer sort of builds. So most of them will be probably martingale or grid, but again, you can learn the basics from these sort of people into how to build certain systems.
Right, Blayn, I'm going to have to love you and leave you, my friend. I need to leave the house now. So, guys, thank you all for joining. Thank you all for your comments. I'm leaving you in good hands with Blayn here now. I also won't be on tomorrow's live stream because I need to take my dog to the vet because I found a lump on her stomach. But I will be back on Thursday, and we'll do kind of a market overview and a Darwin review session. But for now, I'm clocking out. Blayn will stay and finish up the sort of testing and what he's doing. But Blayn, massive thank you as always, dude, for leading the session, and I will catch you all later. Peace out, guys.
See you, Ken. Okay. So you just got me now. That's fine. Okay. So we've started to get some decent results in. Again, everything's looking pretty good. But again, what I want to see is some more consistency. So we can actually see across the board here 90, 100, and 100. Sorry, 100, 110, and 90. We are seeing very similar results across the board. I know that's a 9% difference between 80 and 100. But again, it's not that massive in the grand scheme of things. It's only because we're risking 1% per trade. Now, normally, then what I do is I de-risk it to 0.1% or 0.05 or lower, depending on how much assets I am running at one certain time on a certain portfolio. We can then de-risk it, and again, the results will be quite squeezed and almost identical. You're only going to ever see massive differences the more you risk. So I'm not too bothered about that. So best result is 100 and 110 second, 90 third. So that means that the 100 is between 90 and 110, which is actually a good one to potentially use. But what we can see is it kind of works anywhere from the one standard deviation from 70 all the way to, go to 1. So between 140 and 60, it's actually pretty good on the one standard deviation. So this is something that we'll probably use. If we could use, let's say we'll just use, how much of a difference each side? Yeah, so we're starting to see a massive drop off to the 120 side. So I'd be more inclined to go with something like the 90, because the 90, we've got the 2 steps here, 3 steps there within 10K, and then we've got 1, 2 steps. So maybe 80, 90. We'll just go with 90 for now. But what I'm wanting to see is there's a good safe region between the 2 periods, so there's not too much of a big difference. Standard deviation wise, 90, we can see that when we move the standard deviation up to 2, results are completely off. So maybe it is a bit sensitive here. Then let's see. Again, 4 is actually not too great either. 3 is not too great either. So what did we have last time? 3 and 100 was here. Okay, so how did we get that last result? I don't know. Interesting that we got this result on that. Of course. We've not done the out sample first. That's why. Cool. Let's just do the out sample on that. Let's see if we get anything different. We might not. So the inputs we chose was 90, a standard deviation of 1. Actually, I'm going to bring up TradingView so I can have a quick look at the difference between the two standard deviations. Let's choose something like that. So just give me a sec. You guys won't see this, but I've got another screen up just looking at this because I just want to see the difference in Bollinger Bands. It's something I've not used in a while. Or again, these are things that I look at, like added another Bollinger Band. Okay, what is the massive difference? So we've got a 90 length. What's the massive difference between the two? This and then another Bollinger Band. Again, 90, but moving on. Okay, there is quite a big difference. Again, not massive. For the most part, it'll be very similar entries, actually. Okay. We'll just continue with this for now. We'll probably continue this into tomorrow. We'll see if we can get anything that works on the Bollinger Band. Yeah, it is volatile. I mean, unfortunately, this is sometimes what you get with entry model systems. Not all graphs are going to go from the bottom left to the top right, I'm afraid. It's just part of the whole research and development stage. And even when you do, you can get some, like for instance, like today, I think today's going to be negative, some negative $250 or something like that. So it's not the worst. Had a lot of trades, but again, they're all like low risk. It's just kind of what happens. Probably take a little bit more of a loss as well today. But hey ho, that's just the way trading is. It's like I've not even lost that much, like 0.25% today. So again, like over loads of trades, I've not been totally killed. It's just the whole point of having a diverse portfolio or lower risk, that even on like today, I would say is like quite a bad day. It's still not really made too much of a difference to my actual overall balance or equity. Again, another day, these things could all go in the right direction, and instead of like a small loss, it'd be a massive win. So that's why we do portfolio management. That's why we do portfolio sort of design. That in a day where things are not too great, it kind of counteracts itself. I want to know someone like we made some body how to differentiate trend and range in market. That is probably the hardest thing that you can do. Try and find something that differentiates ranging and trend in markets is hard. Again, you can use you would use a moving average with a volatility sort of metric, but again, you can then fall down the trap of overfitting it. So it's quite a hard thing to actually go out and find. Just quickly check with the 2. So we've done the 90 with the 1, didn't we? Yeah. And then the 90 with the 2. So we then, if we see that like the just an added in the standard deviation of 1, we're seeing a massive drop off in results, which is really interesting. I want to know why. That'll be why, because sometimes we'll be in the shorts. All right, okay. That makes sense now. Is that why you have multiple strategies? Because a lot can range for months, potentially making stuff profit. Yeah. Like the reason I have like lots of different strategies is because like some will perform well in different sort of market regimes. I'm still working on trying to get more of a range of assets to make it a little bit more diverse at the moment. So this portfolio that you see down here is my test portfolio. And what I'm doing is I've got loads of different strategies all tested on forward test, as well as what I do is I have my actual live Darwin as well, copying to this. So basically what I'm doing is I'm seeing with my actual live portfolio as it is right now, how does it look when I add all these sort of systems to it? So basically what I'm doing is I'm getting an idea as to, like, rather than looking at singular strategies to add, I'm looking at how it all works well within the portfolio. So it might say like the correlation is low, but what I want to do is see on an intraday level for myself in live, the live markets, if it works well within the portfolio. So this is what this portfolio here is. So I've got a lot of, like, I've never really traded like indices before. So that's what I'm testing at the moment. A lot of different indices strategies. Some are doing okay, some are not doing so great because I'm still trying to get used to building things around indices. You know, it seems like such a simple thing. It should be a simpler market to trade because it's got that long only bias. But like I don't like holding trades for too long because it gives me too much exposure. Also, the fact that I don't want to be too exposed to the underlying market as well. So that's why I don't like you know, if we're long only, it means I'm holding long trades for a longer period of time to go with the overall trend. Then it means that I am susceptible to whatever the market conditions are right now, where I want to be sort of like uncorrelated to the S&P as much as possible, or like the Dow or the DAX. So I'm trying to find like sort of intraday strategies that are working within those markets. It's just very hard because a lot of them are quite choppy, or when the breakouts do happen, they can be very quick and then they're over quite soon as well. So yeah, that's what I'm trying to do at the moment. I'm trying to keep constantly building. No, I'm not a scalper. My average hold time is roughly 18 hours, so not quite saying it's more like intraday. I don't know how you would describe. I don't know how people describe what sort of trader that is these days. But some trades might last more than 2 days if the underlying trend on some of these positions are going well. But most of my trades are over within 24 hours, so more intraday trading based. It's just kind of how I've liked to trade most of the time. I did used to be like more of a swing trader. You know, I'd hold positions for days, sometimes weeks, but I just found that a bit more, how would I describe it? It was more of like an emotional swing as well, because could be up quite a lot and then the market drops quite a lot. So that was in my early stages affecting a lot more of my like sort of mentality and things like that. Now I could easily go back to it now because totally different sort of trader now, because I would probably incorporate it into a low risk model and it'd be all right. But it's just, these are most of the systems that I built today that are more intraday. Some are sort of swing, some are like, yeah, that's essentially my sort of, short-term swing, you would probably say. That's correct, probably. Short-term swing for the most part. Like for instance, you see this dollar yen position. This will probably close 40 or 50 minutes time from now. So I don't like to be exposed to. If I can cut costs as much as possible, that's kind of what I'll do, because the more systems that you have, you're obviously paying a lot of commissions essentially anyway. But if I can avoid potentially paying swaps or things like that, also the fact that every day is sort of different as well, then that's what I kind of look at it. That's my sort of theory. Everyone's got a different bias. Everyone's got a different method. It's not to say anyone's wrong or right. As long as you're profitable in the long run, then you know your method works. It's valid. Like me and the guys, just want to train. I'm more data driven. What should I approach to do the journey? What's your advice? I mean, obviously, like you just literally follow the data, but make sure that you've got a very thorough process into when you would decide to actually apply a strategy live. So how do I describe? Like I've got a very strict method for actually applying systems to my live account. This account's different because like the good thing about Darwinex Zero for me and my from my main account is this is my sort of playground. This account that like I can test so many different things going forward because it's not gonna hurt me in any way financially or even in this sort of thing because I've got my main portfolio, which is my best strategies, most robust strategies, but I'm trying to fill the gap on some of the areas that I feel like it's maybe lacking in. But I would say have a really good, robust approach to building strategies. Now, we just kind of went over today, like the sort of ranges and areas that I'm looking for. But unfortunately, today's not been the best example either. That's what you're going to find. Like most of the time when I'm building these things on stream, most of the strategies will probably fail or be a little underwhelming compared to what I'd like actually take and trade live because it's a very in-depth process. It's very, I'm not rushing to so the best advice I'd probably give is don't rush to get a system live. Take your time, make sure you've done the work and you've done all the checks. Essentially what you want to do is try and break the system. So throwing different conditions at it and seeing does it still hold up. Now, what I mean by that is not like, if you're trading breakouts, don't try and trade the opposite of that. So like you're trading a breakout to the long side, don't try and put it in a down market because then that's just completely not validating the whole thing. My point is like try like different sort of like stop losses, take profits, or management. Just try and make sure that it's kind of all equal and the same as possible. So what I mean by that is all your results are like similar within like a range like this. So like if you change the stop loss one or two times, you're still seeing roughly about the same profit to drawdown sort of ratios, things like that. Because then it means that wherever your entry is, you've got a lot more breathing room as well. No matter whether you make a smaller stop loss or a bigger stop loss, it's worked within that good range, and it means that it's not too. It's pretty good. That's what I found. That's what's worked for me for the past. What's that? 6 years. Every year's been profitable so far. So that's kind of what's worked for me over that sort of term. I've not been algo trading for that long. Like when I say that long, 3.5, 4 years. But before that, obviously I was swing trading. But again, what I like to see is it kind of worked across a magnitude of sort of stop losses. So I would apply fixed method, ATR method, things like that to try and make sure that the devalidate the strategy essentially. So yeah, that was quite a lot that I just rambled on there. But unfortunately for today, we're not seeing too much in terms of anything great. Now, again, most of my strat, like I'm quite rare to go down to the 1 hour time frame for the most part. Because I find the lower the time frame you go, the more noise that you catch, the more that then you need to apply to filters to then means that you're going to be overfit. So normally, I normally don't go as high. I've never go as low as the 1 hour. Like I would normally be 4 hour and above for the most part, or I use like consistent sort of like ranges or breakouts and things like that. So yeah, maybe the 1 hour was not the best. Again, like sounds quite bad, but I'm always like I always do like trading on the daily time frames, so that's something that would be quite interesting for me to try here. Again, with them doing once per bar on a daily, it won't work. So let's try the 4 hour anyway. We'll see if we can get anything here. If we can't, then I might spend the rest of the evening before anything's on to see if we can get anything that's going to be worthwhile showing tomorrow. If I can't or find something that's maybe worthwhile showing tomorrow, then tomorrow we could maybe build something else. Or if anyone has a suggestion on what to build, then maybe I can build that on the stream as well. So, let's see how long this will take. Shouldn't take too. Should it? Reoptimize again. Okay, I think this is frozen a bit. Yeah. Oh dear. Uh, most of them. Think about that. I would say like there's quite a few that might like maybe not. It's quite hard to describe essentially because some of them will actually like take points of interest from the daily or the weekly, or you know there's different methodologies to certain strategies. Like some might look at some sort of time range or seasonality. Some might be taking it from daily for a point of initiation or like an area of interest. There's quite a lot of different things that are. I try and make sure that I'm not just taking everything from like one sort of like data set. So like taking loads of different entry points from the daily because then they're gonna maybe like overlap. So I try and make a variety of like different time frames, but also time horizons that are not sort of applicable to like the candles itself or looking at sort of seasonality as well. There's like a good range within there. Some are better than others, but the good thing is because they're not all taken from, like, say, one area, it then allows me to trade sometimes the same asset, and it makes them uncorrelated as well for the most part. But yeah, I've got like a really good variety of strategies. You know, when I first started, I started off in the weekly and the daily because they're the easiest to get quick results on. As in, when I say quick results, you can test quite fast in the daily and a weekly, and you can actually build some pretty solid strategies in the daily and a weekly because these are like time frames that most people would ignore because they feel the need that you need to be in the lower time frames to be profitable, or you need to be in the action, like in the trenches, to be profitable. Sometimes some of the good strategies, you're only taking one or two trades, maybe a month, sometimes less on some of these strategies. But if you've got a good long data period and it makes sense, then some of these strategies are really good. So I hope that answers the question for that. But yeah, like I do trade like a multitude of different things without giving too much away. Are you following any series or do you do random streams? So like today, like on a Tuesday, it's like strategy development. So basically, what I'm doing is building different strategies that I find online or like from a sort of like research paper, building them for you here. Most of them will be simpler builds to get people started, to get the ideas flowing for people. And then if we do seem to build something out from some of these really simple strategies, they might go on the charity Darwin. Now, what that is me and Kieran are putting strategies that we build that might not be good enough to go on like our main portfolios. So we put it on the charity Darwin in the hope that we do make a return. We do expect to hopefully make a return, although it's been pretty flat to begin with. And then we obviously will, any money that we make from the charity Darwin will be donated to charity. So if you follow us on a Tuesday and a Wednesday, sometimes on a Wednesday, if I'm here on a Wednesday, it sounds quite bad. I'm not going to do a market overview because I have no idea where the market's going. And it to be pretty brutal, like I don't really care because all my decisions are made on data. So I look at the charts to kind of see, engage like where some of my positions are, like if I have the chart open or something like that. But for the most part, I'm not too bothered about what's happening in the market unless the S&P is dropping and I need to sell some stocks. That's the only time that I'll look at the market. That's the only time I'll ever really look at the markets. Because from a trader point of view, yeah, just it's to me it's just noise now looking at charts. So it's good sometimes, like, you know, if I have an idea and my ideas are flowing, I'll look at a chart first and foremost, maybe before I build it, to see if there's any sort of rationality or like logic behind it that, okay, maybe this would work before building and testing. But for the most part, no, I don't look at a chart. So on a Wednesday, if you've got me out ever on a Wednesday, we'll be building, testing, or going over something. Because there's no point in me rambling on about a market overview when I have no idea what's going to happen. Is there any chance to share a strategy with you to put in a charity, or it's only you and Kieran? I mean, Look, we're always open. We're always open to ideas. You know, if you DM one of us, we can have a look at it, and definitely, potentially, like we're happy to have people inputting towards it as well. So yeah, give us a message, and we'll see if we can get something set up. What sort of instrument is it trading? Can I get your thoughts? What would you say simple? What you say build simple systems we suggest to begin with? Indicators, more price-based systems, or breakouts? To be fair, like for me, like breakouts, like are like very simple to build. You will get positive results from most of the breakouts. You'll get positive results from a lot of breakout systems. You just have to accept that the win rate's going to be a lot lower, and you're going to go through times of like drawdown. That's the one thing that I would say about breakouts. Like you can, like for instance, like today we're doing a basic breakout of a Bollinger Band, and it's profitable essentially, but it is going to be susceptible to market regime. When volatility is dry on certain pairs, it's not going to work as well. So breakouts is a really good place to start. And then you can take it from there. Mean reversion is, for me, probably one of the toughest things because, I've got a few that I'm working on at the moment because I'd love to add some mean reversion in. But again, it'll be added to this account below before anything goes onto my live account. Like I'm very, very strict into what actually goes into my main account. But indicators could be a good start. Like, Bollinger Band breakout's fine, Donking Channel. These sort of things for breakouts work pretty well. Trying to think of anything else. A simple bar breakout when price crosses like past 50 bars or something like that, that can work as well. Commodities, the commodities, what is it called? The CCI indicator, what's that called? Again, that's had some positive results. I've got a strategy that uses that for a condition that actually is pretty good depending on the market. Time horizon breakouts. There's so many breakout periods that you can test that are good. Price action, depending on what you're trying to build, I would say is one of the toughest things. So like you could test like, I don't know, a morning star or an evening star. You're gonna get negative results because it's too how would I say it? Like it's an entry. That's an entry model, but when you're in an area where there's an edge or something like turnaround or something like that. So the edge is not in the entry there. The edge is in the areas of interest essentially. So that's the thing that I would say about candlestick patterns. Like there is certain candlestick patterns that we can then trade a breakout of. I've built things like that before. But yeah, like there's so many different things that you can test. Just try and find any sort of simple system to begin with. Like we shared a Scott Welsh one today. He's got quite a few simple ones. Whether they're any good long term, I don't know because I don't trade any of them. But it's a good place to get things like moving first. That your ideas are flowing. Then you can take it from there. When I first started, it was a bit of a minefield. But again, you start to realize what kind of works, what doesn't, and then you start building out from there. And you'll never run out of ideas because, like, literally, you can pick up any trading book that's on systematic trading, and you'll find systems like. Okay, great. That's super helpful. I'm trying to build systems to use other than UJ, which I know breakouts work well. Yeah. UJ works well for breakouts for the most part. Gold, another one good for breakouts. Nasdaq, another one good for breakouts. Silver, another one good for breakouts. I mean, like, even I've got euro dollar breakouts on that. Pound dollar breakouts on that. Like, you can get a breakout working on a lot of different assets. It just, again, is all to do with regime more than anything else. So, like, my euro dollar strategy will not trade a lot. only trades when there is volatility in the markets. Like, for example, today, I think it traded 3 times. I got 2 winners and 1 loss. So again, it's all dependent on building it for the certain types of market that's not over optimized. Like, there's so much, it's quite a minefield because there's so much you can build and test. But I would just kind of get a structure together, and then keep building it that way. So once you get your first profitable strategy live, not based on your back tests. So like, if you get some good ones live, then you're like, okay, what did I do to get to that stage? What framework did I follow? And try replicate that on the next system. So, that's the sort of way that I done it. And then from there, I was then able to sort of gauge as to what is over optimized and what's not. I'm still working on that. That's one of the purposes of this account here, because I'm trying to see at what point is because nobody has a definitive as to what is over optimization and what is not. So I'm trying to really push that to see if I can find a defined answer. I don't think I will find a defined answer, but I'll be able to find an area as to where it starts to sort of like the bias flips from not over optimizing to over optimizing. So that's what I'm trying to find out right now in these sort of like builds down here, because it's really interesting to see where you can take them. Cotton goes to the message you, is trading UJ, whatever. Okay, yeah, no worries. Just send us a message and we can have a look at it, or jump on a call and speak to you about it. I'm pretty sure Kieran will be fine with that. I don't see any problems. But yeah, Blayn is sick of candlesticks. Yeah, sort of. Depends what mood I'm in. Sometimes I do like go back to the old days of like looking at charts, but for the most part, no, I just kind of fill in some journaling spreadsheets and basically cross things off a list as to what was good today, what was not good today, and what can I take further to the next day. No worries, Yuri. Okay. Let's see what we get. So again, just pull this down. I've got one more result to come in, but I'll do first about that. Or let me turn it around. Right. Again, we're seeing about that 100 period, even on the 4 hour, is like where the peak's sort of happening. We're seeing a tail off to 80 again and a peak up there. So it's not too bad. But what we are seeing is we're seeing a massive tail off with when we're increasing the standard deviation, we're starting to see that it's becoming unprofitable the wider we make the bands. So the wider we make the Bollinger Bands, the more likely the breakout's not going to happen, which kind of makes sense if you think about it. Things can't keep breaking out higher and higher and higher. So yeah, that's quite interesting. So what can we say? We can say that 2 is still profitable for the most part. Let me have a look. Yeah, for the most part, it looks profitable. But yeah, period 1 in 100 seems to be the best. Yeah, it is. Let's have a quick look at standard deviation. So the 1 standard deviation, how much of a drop off are we seeing at the 2s? Okay, so 60. So we're seeing that actually the standard deviation of 2 has got a better result than the standard deviation of 1 on the period of 60. So that's interesting. 70, we're seeing 70% return. And then on the 2, we're seeing 48. Okay, so that's a little bit closer. That's not too bad. 2 and 80, so 36. 46. Again, that's not too bad. 36, 46. That's not too bad. So you would say anything within there. Again, if we see 100, what is 102? We can see 30. So yeah, I would say that's not too bad. We could probably go a little bit deeper into, you could do like standard deviation 0.25 and steps 0.25 all the way up. But we'll just keep it simple for now. And then we'll probably continue this tomorrow. What time is it anyway? 5:30. Damn. Okay. Awesome. No worries, you. So yeah, let's. If I don't speak for sometimes, it's because I'm trying to analyze the data and actually, rather than ramble, I'm trying to actually do it as to how I would do it in a really focused session. Because I'm not very good at speaking while I'm thinking at times. Normally, I'm very focused. So 100. So again, we want to be somewhere between 80 and 120. 120, no. 110 and 90, anything between there. So yeah, 100 is probably the best sort of period. So we're going to do 100 period regardless. We just need to see the difference. Yeah, we can disregard 4. We can disregard 3. Interesting if we get a result between these two values. So let's try. The good thing that we do know is if we increase it by 1 standard deviation, we're still profitable overall. And the drawdown is very similar-ish, 3% difference. We are getting a lot less trades. Go to 3, then it's still profitable, but just not enough trades. So the good thing that we've got here is it is profitable. But again, this is based on this period. What we want to see is outsample both sides to kind of work, or at least work it to some degree. So let's change this to, let's just go somewhere in the middle, just to sort of like test the boundaries here. Again, what we don't know though is we don't know that the, again, we're basing it on the stop loss value and take profit as the last one, which is fine because then we're trying to see if that value of the stop loss worked the same as the 4 hours it did the 1 hour, and the take profit as well. So interesting. I mean, this is always going to be a tough one to kind of get right on the Bollinger Band because again, the lower time frame that we go, the lower time frame, the lower standard deviation we go, the more breakouts we're going to have, the more trades we're going to have. So it's going to create some noise. We'll have a look. So the testing period was till 2023. So we want to see profitable before 2020 and profitable after 2023. If it's not, then again, it's kind of over optimized. Or maybe not over optimized, but it just doesn't work out of that sample areas. We'll see. So far, not looking too great. You can see the max drawdown is somewhat quite big. Again, this is a 1% risk. And we know we're going to make something along the lines of between 74 and 30,000 in this period, maybe. Or we're expecting that. So one thing that I will add that it might not seem like we're building anything great here, which we're not. But the good thing is the fact that I'm building it and testing it means that you don't have to. So you know that you don't need to potentially go and build this or test this later on as well. So there is a positive within this, as I always say. Like that's the positive about building a lot of these strategies. Okay. So again, this looks like it's showing us very, very similar results to the last one. We can see between that 2022 and 2023 period where we did have really good sort of bullish momentum, and we did have like lots of good trades here, but it is kind of lacking overall. So we can see that literally, my conclusion so far from this sort of entry so far, I mean, it's starting to push up again now. But yeah, it is kind of lacking. Oh, didn't mean that. Maybe it's not that. Anyway, it is kind of lacking. So maybe I'll try a different market after what's the time? 5:30. Probably have to try it tomorrow morning. We'll see if we get this working in a different market. If not, we'll build something new, because there's no point me sitting here testing it all live for you if nothing's going to work on this either. If I do find something that works, then we can take that further tomorrow. If not, I'll find something else for us to build tomorrow. Like I might take something from my Oxford Strat, or if anyone has any idea of a strategy that they want built, that they've seen a video of or something like that that is somewhat simplistic, because some of the strategies that you will see online could take probably the best part of a day to build sometimes. That's just the reality of some of the more complex strategies that might not sound like they're complex, because obviously the way that we think and can analyze things in the charts ourselves, but the way that you know if something's overcomplicated is just honestly write it down and define each sort of element to it, because that's where you'll start thinking, okay, I don't really know how to describe that. Well, if you don't know how to describe it, then it's not going to translate into an algo for the most part. So that's why it's very important to sort of like go through that sort of method. But anyway, thanks very much, guys, for joining us. I'm just going to call it a day there, because I'm not going to just sit on a stream and just test heaps of things. I'm going to let this all test in the background across multiple pairs while I go and cook tea or something like that. And then from that, I'll be able to get an answer as to is there anything that we're going to take forward to tomorrow. I'll let you know in the Discord if we are taking things further with the strategy. If not, then we'll just move on and I'll find something for tomorrow as well. Because, as I said, there is an abundance of stuff out there that we can build and test on. So we're never going to run out of ideas. We're never going to run out of things to build in a Tuesday session. So that's the good thing. But yeah, thank you very much, everyone, for joining me. And yeah, feel free to drop in tomorrow, where we'll either be continuing, as I said, or building something new. And everyone enjoy the rest of your evening, okay? Cheers.